Success is the child of drudgery and perseverance. It cannot be coaxed or bribed. Pay the price, and it's yours. Orison Swett Marden. My friends, 10 to 15 minutes a day is your sweat and drudgery. That is all we ask from you. To follow your favorite stock charts, sit here with us, go over these charts, learn by doing. If you subscribe, which is for free at chartingwealth.com, every day you get a special training. The training today is Stop Analysis Paralysis, Limit Your Indicators. Great training. It is in your show notes if you're a subscriber. If you're not, you need to become one, because every day we also send you the PDFs for our daily market worksheet, weekly market worksheet, and trade worksheets. Those are indispensable for speeding your learning. And at the end of today's video, I'm going to put all three of the videos we have showing you how to fill those out and use them. They are extraordinary. If you will just do that as you listen to the program and with all the practice trades you do, fill out the trade worksheet every day, the daily market worksheet on Fridays, the close of the market over the weekend. While you're listening to the weekly review and forecast, fill out that weekly market worksheet. You can do it while you listen. Let's jump into these charts. We see stocks up for the day, bonds and gold down, Bitcoin rebounding almost 10%, 9.46. Let's jump into the S&P 500 first. What do we see going on? Same divergence that has gone on for weeks. As the price percent oscillator pulls away from the red signal line, derivative oscillator losing a little bit, still edging up. This is the market that won't go down. Now, summertime trading zone seems like we're sort of back where we were in past years, not the COVID summer. But remember, sell in May and go away, live to trade another day is an old market adage. What does that mean? It means summertime trading zone, because of the lack of volume, tends to be crappy. The fall-winter trading zone is what we live for. I know some traders that only trade during that time period. But I encourage you to stick it out in the summertime, practice trade, because if you can trade in the worst time of the year, when you get into the best time, it's going to be gravy, brothers. Now, let's see where we are going. Up a little bit for the day, 0.95%. Well, that's more than a little bit for the S&P. But again, still have that overhang, that downward push. Look at the 2-day. Trying to cross over, has not crossed yet. Heading up. Maybe we're going to see a cross 3. It's going into the third week of the derivative oscillator gaining upward momentum. Maybe at the close of this candle, we shall see. That'll happen on Tuesday. We shall see a crossover. The way I'm calling, we haven't seen a crossover yet, is look over on the left-hand side of the screen. Underneath that horizontal gray bar, you'll see PPO 1024. That's the setting. Look at that number, 136. Well, that's lower than 138, the red signal line, which is the exponential 8 moving average line. That's 8 periods. It is higher, so we don't have a crossover yet. We'll wait and see. If we do have that, then of course we'll move the crossover line on the 2-day chart, moving in the opposite direction of the weekly. See where that leads us. What's going on the half-day? Look at the seesaw. Look at that. That's why you're getting a crappy pattern on the 2-day and the weekly. Things, again, trying to just continue pushing up. You can see how it's slowing down. See how the movement has dropped below, even though there's some up movement in the market today, how it's dropped below that 4-hour trend line. That's because it's slowing. That's what's causing all of this herky-jerky pattern in the half-day chart. And this refusal of the weekly vertical crossover to cross over. Going up. That's why that price percent oscillator's staying down. It's this devolution that you see happening. So we'll continue to watch, wait and see how this market continues to move along. And did I say the S&P was up point? Make sure we got the regular hours there. Not up 0.96. That is the Q's that's up 0.96. The S&P's up a mere 0.22. Let's go to the Q's, the Nasdaq 100 on the weekly chart. getting closer and closer to crossing over. Derivative oscillators trying to turn positive. First day of this 5-day candle. Nice green up candle moving up. We go from, and you can see the price percent oscillator not quite crossing yet. Look at this 2-day. It crossed over going up back on the 7th of June. And of course, we've got 5 days now of up movement right up that 2-day trend line. Derivative oscillator gaining upward momentum. Price percent oscillator spiking up. Half day, it crossed over going up back on the 7th, also in the morning. And you can see where things just keep moving up. As the price percent oscillator heads up, derivative oscillator gaining upward momentum. So we'll see how this week continues to shape up for stocks. Consequently, stocks going up, bonds going in the right direction. That should be down if stocks are going up. Typically, bonds are a safe haven. And when stock market goes up, money tends to flow from bonds into the market. We do, however, see that the price percent oscillator is still positive. Derivative oscillator gaining upward momentum, not hitting a higher high because, of course, these are Heikin-Ashi candlesticks, but they still reflect in the end the fact that we've not hit a higher high. Go to the 2-day, and again, you can see where that price percent oscillator shaving off some of its momentum. Derivative oscillator gaining a little bit, and you can see there on the first day of this latest 2-day candle, not hitting the high that was set on the Thursday, Friday candle. And as we go to the half day, that's where you see down in the morning, further down in the afternoon, laying right there on the 2-day trend line. Derivative oscillator, barely positive. Price percent oscillator, not crossed yet. May happen on the morrow, on Tuesday. We shall wait and see. What about gold? Down a little bit for the day, 0.59%. Now, gold continued to rocket up. In fact, the biggest week most recently was the week ending the 28th of May, slowed down that week ending the 4th of June, even slower on the 11th of June. And then, of course, this week starting off with a red down candle, solid red down candle. Haven't seen one of those since the 1st of April. So we can see the price percent oscillator flattening. Derivative oscillator peaked back on the week ending the 4th of June. And again, as this week starts, gold appears to be losing a lot of energy, particularly on that price, on the Heikin-Ashi candlesticks. You also see it on the 2-day. And again, trying to cross over. We'll see if we have a crossover going down at the close of the market on Tuesday when this 2-day candle finishes drawing. But that looks to appear happening quite strongly right now. It'd have to be a big up day to pull that price percent oscillator back through the red signal line. That's possible. Derivative oscillator going into its 3rd day of downward, gaining downward momentum. Half-day chart. Of course, the half-day has been going down since it crossed over going down back on the morning of Thursday, the 27th of May. And of course, went up for a while, down, up sideways, and most recently down. Way down in the morning, recovering a little bit in the afternoon on Monday. That price percent oscillator spiking down, derivative oscillator going down. Maybe gold starting to lose a little bit of its luster, but did it not do well for us, friends? Jumping in somewhere around the 166.50 mark to a high of 178.61. Quite nice. Now, let's go lastly to Bitcoin, rebounding up 9.46%, starting the week off with a green candle. Hadn't seen one of those in 5 weeks. It's little, but it's nice. Price percent oscillator also slowing its descent. Derivative oscillator losing downward momentum. That's just one day, but it's a pretty day. Look at the 2-day chart as it moves up with a nice green open box candle. First we've seen since the 10th of May. And again, haven't seen one this size except maybe all the way back in April, mid-April. So that's nice. Derivative oscillator losing downward momentum. Price percent oscillator heading up. Typically that 2-day has to cross over before it can carry the weekly. So that's nice to see. Maybe that's happening. And of course, we look at the half day. We saw it cross over going up in the morning on the 10th, Thursday the 10th of June. And of course, booming up in the morning and afternoon on Monday. quite nice. So again, we'll watch. Maybe Bitcoin has found its bottom. Wouldn't that be sweet for all of you who want to practice trade Bitcoin? That's where we are as we end the day. And I noticed that we did not have any space available for anyone else to join as Patreon supporters. Well, I just opened up some new spaces. If you've been trying to go there and get all of the benefits that we give to our Patreon members, just opened up some slots in the $30 support, $1 a day. You know what you get with that. Those of you who've been around for a while, you get, of course, once a week, our up to 20 weekly vertical crossovers, up and down, 10 and 10 when those present themselves on the S&P 500. We always have at least 20, seemingly. Not all of them are always the best, but we sort through them, give you the best that we can find. And again, great for practice trading, great for learning how to trade options, also to get in there, sell covered calls, do whatever it is you want to learn how to do. Those weekly vertical crossovers provide that to you. Also, our once a month live question and answer call-in session for our Patreon members, where we help you review the stocks you're interested in practice trading, along with answering the questions you have, the problems you've run into, the concerns. We try to help you solve those. Plus, our 3-part series, Options Made Simple, the Charting Wealth Way. You guys love it. And again, a great way to start in options, understand just what's going on, get your feet wet, and learn how to start practice trading them. That's where we are, folks, as we end the day. If you love the software that we use, TC2000, those are the charts we use every day. There is a link in your show notes for $25 off. Consider subscribing. You also get to support us a little bit by doing that. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.